interdependent and complementary. That's what the world's two largest economies are to each other these days. Bilateral trade in 2014 rose to $555 billion. That's 227 times the number in 1979 when the two countries established diplomatic ties. China also benefits greatly from U.S. direct investment. China attracted over $75 billion by the end of 2014, with over 64,000 investment projects established. However, that trend has seen some hiccups recently. In the first 8 months of 2015, U.S. direct investment to China declined by almost 20% from last year. The Chinese Ministry of Commerce explains that the decrease is due to changes in both U.S. and China markets. It comes also as China adjusts its way to leverage FDI with more focus on higher-end industries. A 2015 AmCham China white paper says that more than 30% of the organization's member companies have no investment expansion plan this year. That's the highest rate since the recession of 2009, and more companies than ever have moved or are planning to move capacity outside of China. That's partly because of the rising costs and shrinking profits, which have a greater impact on traditional labor-intensive industries. The regulatory environment in China is another concern.
Laws and regulations in China, sometimes it's relatively vague. The different cities of Chinese government may have different interpretations of the same law, same regulation, or same rules. That brings challenges for U.S. investors.
In transparency of China's regulation, and also they are quite concerned about the equal market access and fair competition in the Chinese market.
However, experts say the quality of the investments is getting better. More investments flow to higher tech, service industries, and R&D. That's also in line with China's strategy to deepen reforms and upgrade its economic structure.
Over half of the companies in the R&D intensive industries have set up R&D centers in China for higher quality with higher technology products for China's market as well as for the neighboring new emerging markets.
However, to attract more foreign investment, more effort is needed.
The first thing I think is to open the market and to lift market access limitation. Also, I think simplify the approval procedure will be another thing the government can do.
And some new attempts have worked out.
I helped a U.S. healthcare company set up a subsidiary in Shanghai Pilot Free Trade Zone 2 months ago, and we obtained a business license within 2 weeks. But in other places, at least you have to wait for 1.5 months to obtain a business license.
With an even better investment environment created, there's clear hope that bilateral investment cooperation will step up to a new level.